Welcome to At the Market, a look ahead at Chicago area real estate. Brought to you by At Properties, the #1 brokerage firm in the region. Welcome back. I'm Peter Olesker and we are At the Market. We're live in Wicker Park at Alcove Wicker Park. It's a new condo and townhome development tucked right in between Milwaukee and Division. And summer's back. And the pandemic is receding, restaurants and ballparks are filling up. At Properties always says, love where you live, and it sure feels like a summer of love in Chicago. But is it a summer of love in the housing market? Here to answer that question and many others are At Properties CEOs, Mike Golden and Thad Wong. Welcome, guys. It sure is good to be in person.
It is awesome to see you and touch you, Peter, and be right here with you.
Thank you. Yes, it's awesome to be touched, Thad.
Yes. Not sure I'm going to go there, but it is nice to be back in person, although I did like sitting in my underwear doing these on Zoom. No one knew.
Yes, I think you fooled us all.
Yeah.
Well, let's jump right in. We're talking about summer of love. Would you say that it's a summer of love for buyers and sellers? Mike, let's start with you. Summer of love for sellers.
Without a doubt, this has been the summer of love, probably the year of love for sellers. We've seen unprecedented demand during the pandemic and now as we're getting out of the pandemic. And with lower supply, sellers have largely been in control. We've seen multiple offers. We have seen escalation in prices in general. So sellers are doing great. The only problem that sellers run into is they become a buyer when they sell their house, and the story is a little different on the buyer front.
You know, it's interesting. What we've seen over the last year probably is I've never seen sellers get as much of a premium than those sellers that work closely with an agent and upgraded their home, painted, decluttered, added wallpaper, upgraded kitchens, baths. Those sellers that got into the details of improving the look and feel of their home capitalized tremendously.
Okay, and then on the other side of the coin, buyers. Are buyers feeling the love this summer?
It depends on the buyer, right? You have a lot of buyers that missed out on opportunities over the past 5 months because they weren't very agile and they might not have had confidence in the market. Hopefully by now, after missing out on a few homes and seeing other buyers excited about moving in, they will believe in the market and be a little bit more comfortable with their offers and being able to be more agile and more intentional. And then you have a new emerging buyer pool that's coming out this summer that's really excited. So I think that for the most part, it's positive, except you have some disappointment because buyers aren't finding exactly what they want in the time frame they want it at the price they're willing to pay.
You know, and that I think goes to the thing that we've been talking about for the better part of a year, which is inventory. And it's no secret that the market needs more inventory. In many areas, the number of homes for sale is about half of what it was in May 2019. It doesn't really make sense to do a 2020 comparison because the market was so disrupted. But is the second half of the year going to move the needle at all in terms of new inventory coming on and maybe opening things up a little bit?
We believe so. We believe definitely we're starting to see the pendulum swing a little bit. Not huge, but we're starting to swing back to a more normalized market. We're still in a seller's market. There's still a lower inventory than we'd like to see. But we're not in a total lack of inventory. I mean, there are some markets where literally stuff comes on the market and it sells in 3 days. And there are things that sell that quickly here. But we are not seeing that level of exuberance in the market. So we feel like we're not in a bad place. I mean, the month supply of inventory, when you look at that metric, it's interesting to follow, but it can be affected by so many different things. And while, at one point in time, we may only have a month and a half of inventory, 2 months later, interest rates go up a little bit. Now all of a sudden, the inventory rates, the month supply of inventory looks much higher because the velocity goes down quickly. So that number moves around a lot more easily than you'd think. And the reality is we're starting to see more inventory come to the market, and we're starting to see a little less of the craziness in the market. The massive multiple offers, the insanity from the buyer side. So I think that's a positive for the market. It's always positive to get back into some level of balance. It's been fun, obviously, with a market moving like crazy. But for a long-term market, you want to have some balance. And I think we're heading there very slowly. Again, we're still in the seller's market.
And that being said, you can go in any market and see unsold homes. And you can say there's 2 types of unsold homes right now. Those that are ridiculously priced and those that have something wrong with them. And the issue is once you're in this type of seller's market for a period of time, greed creeps in. So a seller starts thinking about selling their home and they think this is going to be really easy. There are buyers out there with multiple offers. I'll price my home up to the moon. I won't do a lot of improvements or make it look great. I won't consult an agent, etc. And you see more homes come online at ridiculous prices. The sad part about that, as being an agent, is when you see that happen, you see lost opportunity, because it is a seller's market and someone can capitalize on the sale of their home at a very high number. But a lot of these people that are doing that are going to end up selling their home for less than what it would have sold for at a shorter period of time. Yeah. So you're starting to see that too. Ridiculously priced homes are coming online more frequently.
Yeah, and I mean, nationally we are seeing more inventory. Zillow just released a report that said homes for sale ticked up about 4% in May. I think it was the first increase since July of 2020. So we definitely are starting to see that pendulum swing back a little bit. And the other thing is that it may not feel like there are a lot of homes for sale in the market, but there's a lot of sales activity. So those buyers are finding something. I mean, there's a lot of homes selling. Therefore, there must be a lot of homes for sale.
There are also a lot of homes selling pre-market, and some of them choose to then go on the MLS, some of them don't. But there are a lot of sellers working directly with agents, improving their home and setting up showings with buyers that are out there, because buyers are so out there. These agents have relationships with other agents, and sales are choreographed in the seller's best interest at the right price in a short period of time. Sometimes those sellers choose not to put in the MLS, and so there are more deals happening that are actually being reported.
Sure. Well, we have intense buyer demand, we have low supply, and we have rapidly increasing prices. Even now, we have year-over-year price appreciation of double digits, even in the Chicago market. If you go back 2 years, in many areas, prices are up over 20%. So Jamie Dimon, head of JP Morgan Chase, just did an interview where he said he does think the country is in a little bit of a housing bubble. I want to ask you guys, do you agree with Jamie Dimon? And Thad, let's start with you.
No, I don't. And I think that it's easy to be a pessimist, right? Pessimists sound incredibly interesting, and there's a lot to talk about. And eventually the pessimist will be right. But oftentimes the bears take a long time to be right, and they're waiting for markets to cool off. I also think it's very difficult to judge the entire United States of America in one random sentence, that it's heating up everywhere. For instance, in Chicago, for the last 10 years, we've been incredibly undervalued. In areas like Austin, Texas, and Nashville, we have enormous job growth and population growth. How can you predict that you're going to have a pricing cool-off unless you're expecting interest rates to really skyrocket? And I don't think anybody is. I don't think the country can afford that.
Mike, what about you? Housing bubble, yes or no?
I really don't believe so. Now, if Elon Musk was sending out tweets about the housing market, I might be a little more concerned. But seriously, if you look at the fundamentals of the market, if we look back at 2008, 9, 10, the last correction we had, our market was overbuilt. It was over-leveraged, and it was frankly overpriced. And we don't have any of those factors in the marketplace right now. We are a substantially underbuilt market nationally. Houses and home equity are at an all-time high. So we don't have the dynamics that we had before that would create a housing bubble. And it certainly doesn't feel like homes are overpriced. If you look in the Chicagoland marketplace, we are a value, and houses are selling for less than replacement cost, and we need more housing. So it's hard to imagine that housing prices are going to retract substantially. I mean, we always have small cycles, but we feel like we're, if anything, just catching up with where we needed to get to from the past. I'm sure there are markets in the U.S. that are that maybe a little overheated, and you might see some price retraction. But particularly in the markets that we're in, we're feeling like they're very solid, especially because the market fundamentals are so much better than they were before.
Sure, and I heard you make an interesting comment about the types of homes that people are buying and how that relates to rising prices. Can you touch on that?
There was a big report out about the average price of a home in the United States is at like an all-time high. But it's partially because, think about it. So what did people do in the pandemic? They looked for housing. Do you know anyone that looked to downsize in the pandemic? Everyone was thinking, I need more space. My house is more important to me, the space I live in. So I think what you're seeing is a lot of houses, more expensive, larger homes that maybe weren't selling as quickly, are now much more popular and are selling much quicker. The type of housing is driving up the average price as much as everything else. If you look back to the last last bust, average housing price came down because there were a ton of foreclosures and REO sales that were selling at very, very low prices. We don't have that in the market now. So again, you can spin the numbers a variety of different ways if you want to tell a gloom and doom type story, but to us, people that are in the market every day, the fundamentals of the market and the structure of the market feels very, very solid. And I feel like there's still upside, particularly in the Chicagoland market where, again, we're a value nationally. We've seen some price escalation, but not massive. And if anything else, if you look in the suburban markets, the housing prices in the suburbs were depressed for a decade. Houses were still selling for less than they sold for 10, 12 years ago. So again, you have that sort of catching up where people are all of a sudden saying, okay, if I were to build this house, it's going to cost me X more. This is still a really good value. So we feel really good about where the market is right now.
Okay. But you still hear these stories. Buyer in Austin, Texas paid double what the home's asking price because they bought that home and then they bought the house that the seller wanted to move into, and they basically gifted them that house. So it was the equivalent of double the asking price. There was a story in the news a couple weeks ago about a home in suburban Washington, D.C. that sold for $1 million over asking price. They were asking $4 million. The selling price was $5 million, so it was a 25% premium. So have some buyers lost their mind? Thad, I'll let you answer that one.
First of all, I don't think so at all. And I think that it was ridiculous when they saw that report that somebody paid a 25% premium. How do you know the home wasn't underpriced? Everybody assumes the asking price is this perfect metric, this perfect barometer. Not true. Just as many homes are overpriced can also be underpriced. Now, it's less likely because people want to sell their home for as much money as possible and they're getting good advice. But there are a lot of underpriced homes. Also, when you had limited, scarce items. We've never seen art trade for the prices that we're seeing today. Things that are limited and scarce, whether it's a hedge against inflation, because people are wanting to buy hard assets, and one of the hardest assets is a home, is real estate. That could be part of it. But I think in all reality, there's a lot of money that's been printed over the last year. There's more money coming in and more jobs being created and salaries are going up. So there's more people, and no one's made more money than the affluent. The irrationally affluent, those that can buy whatever they want, whenever they want, at whatever price. And sometimes it's almost tantalizing when you can't buy something, that person. So they just pay whatever it costs in order to get it, and whether it's $1 million, it could be irrelevant to them. So I think when they make these objects, hey, look over here, this buyer's overpaying, this thing is crazy, there are always people willing to overpay for something, but they are satisfying their own need and want. And so I think that those stories are irrelevant when being woven into the current market conditions.
It's not a big part of the market.
Zero.
No, but and those are
Fun stories though. National Enquirer, sort of like those stories you see online that get you to click. Those are great ones.
Yes.
That's what I was going to say. I think that you can always find the one-off stories, and those are the ones everyone's going to write about. No one's going to write about the normal I paid market for the house. They're going to write about the one-off. A number of years ago, I think it was maybe 10 years ago or longer, maybe 15 years ago, Ken Griffin owned the penthouse at Park Tower. And stuff at that point in the building maybe was trading for like $700, $800, $900 a square foot. And he bought the floor below him for, it was like $1,500 or $1,700 a square foot. It was like a huge record price. Well, guess what? A, he was the guy who could afford it. B, there was nothing else for him to buy, because he couldn't go 2 floors below and buy it. Otherwise, he couldn't connect it with the unit that he lived in. So he was the one buyer. That was a big story, huge record. Did that change the pricing dynamics in Chicago at all? No, not at all. It was a one-off sale, got plenty of press, but it's a one-off sale. You're going to hear the one-off stories, but they aren't indicative of the market as a whole. Yes, there are markets where people are paying over asking. Some people price their homes lower than they know it'll sell for to try to drive more frenzy and get a bunch of offers. There's different strategies people take when they're selling their home. You can find the one-offs, but universally, no, the market is efficient and much more stable than that.
The underpriced home will more likely sell at market than the overpriced home.
Totally.
The overpriced home eventually comes down. Buyers are wondering why it didn't sell in this market, and they end up selling below the market. There is a strong argument for pricing your home at just below market to get people to see value and then create that desirability. And once you have that desirability and you have somebody on the hook, they're willing to pay more. Willing to pay more, just like Ken Griffin and this other affluent buyer, because at the end of the day, I bet you that those buyers were happy. Whether they overpaid or not, they got what they wanted. And sometimes it's more important to get what you want than the price you paid for it.
Sure.
For some.
Right. Well, one area where you're not going to pay more than asking or substantially more than asking is new construction, like the building that we're sitting in. And but at the same time, new construction is also undersupplied like the rest of the market. NAR came out with a report that said nationally we need 5.5 million new homes to be built in order to meet demand. I want to ask you guys locally, what are the chances that the Chicago area can catch up with the demand for new homes, both in the city and in the suburbs? And Mike, I'll put it to you.
Well, we noted this before, but part of the difficulty right now is the cost of construction. We talk about the fact that houses are selling for less than replacement cost. There are values out there because people bought them years ago, but the cost of construction, cost of materials, cost of labor, cost of everything has gone through the roof, particularly cost of materials. There was, I read something that cost of lumber drove up the average price of a single family home by like $35,000 or $36,000, some crazy number. Just lumber. So just look at our development here. This development was concepted and was bought, the construction was bought a while ago. Pricing, you couldn't build this for what they're building it for right now. You'd have to sell it for more. And developers are not going to develop and build unless they are able to achieve prices that make them some money. They're not going to build it knowing they're going to lose money. It just won't get done. That's the struggle, I think, in our market, is that the cost of construction's gone up so much, you can't really build entry-level housing anymore and sell it. It just doesn't work. So you have to you have to really adapt to the more luxury, mid-tier to high-tier luxury market, and you have to find the right, the right site, the right everything to make it work. And it's a lot more difficult because as the prices go up, the number of buyers get fewer and fewer.
Well, we're in Westtown, and this neighborhood has been chugging along pretty great throughout the pandemic. What does Westtown say about the city market in general? City markets in general, urban markets nationally. Thad?
I always thought it was ridiculous when we were talking a year ago about city flight and suburb growth and everyone's leaving the city. I thought that was a ridiculous narrative because unless you believed that COVID was permanent forever, that was never going to happen. Because where we're sitting in this development, you got a Phil's Coffee at the corner, you've got great restaurants, retail, awesome transportation infrastructure, fabulous proximity to the lake, and close to your job. And I also think it's ridiculous that people are going to say they're going to work from home forever. I think that this fear of missing the office is going to come into play, and people are going to move back to the city. And those that can afford it, that can afford the type of home that they want, and many won't be able to now because the home they want has changed. It's now larger and it has a yard, especially if they have families. But for many people, if they can actually afford the housing that they want, still want to be close to their office, and also want everything that's going to explode this summer. The reemergence of restaurants, theater, sporting. I've been to Wrigley Field for 3 games so far, right when it opened with a small percentage, and since it's been full capacity, it's high energy. So people that want to be in that thriving, urban, evolving, progressive environment, they're going to do everything that they can to stay. And I do think luxury homes in the Gold Coast and River North that everyone poo-pooed, those are going to come back too.
Mike, what are your thoughts on it?
Listen, I've always been a believer that the city wasn't going anywhere. I think that people accelerated their decision to move out to the suburbs, being a suburbanite, so I understand the suburban dynamic a little better than Thad does. The suburbs have an attraction for some people, and those people decided to move out, and we saw a lot more moves. But what you're also seeing is you're seeing the whole millennial generation understand the value of housing now, understand the value of their home, and you've got a whole buyer pool coming in, and they don't want to be out in the suburbs. They want to be in the city where everything's happening. And I think you're going to see the empty nesters come back downtown too, because once your kids are out, the suburbs are great, but with the restaurants and the theater and all the things Thad referred to, all the great things about the city, as that vibrancy comes back, because it is definitely coming back strong, we're going to attract all those people back into the city. So we feel very, very good about the urban cores in general. Just like New York. Listen, New York's going to take longer because they were affected more. But the reality is New York City is New York City. Like, it's not going anywhere. And, you can move out to Greenwich or to Westchester or whatever, but you're not finding the restaurants, you're not finding the culture, you're not finding any of that stuff, and people are still going to move back. So we are very much believers of the urban core in Chicago and elsewhere.
Sure. Sometimes we're accused of being a little too wonky on the show. I'm accused of being a little too wonky on the show, but I did want to ask you about some institutional investment moves that have been reported recently. Blackstone just paid $6 billion for a portfolio of 17,000 single-family rentals. Those aren't in the city; they're primarily in the suburbs. You have other big asset managers like Brookfield that are opportunistically buying office properties, that are buying apartments in the city. What can home buyers and sellers glean from these recent plays in the institutional investment market?
The obvious, why would Blackstone spend billions of dollars on single-family homes in the suburbs? Because they feel that there's going to be appreciation in housing. Blackstone is not on a conference call with Jamie Dimon. They're going in opposite directions. There are always two philosophies and there's only one answer. And also predicting a market is very difficult. They're making two very different predictions. One is putting their money where the mouth is, and one is just talking.
I agree with that. I think that you can assume as a buyer that if you don't buy and you're renting, your rent's going to go up, because you have these institutions making these investments. They're definitely not doing it to lower the rents. And they're looking at appreciation in rents, they're looking at appreciation in value. They're seeing that that's where the market's going. So we know interest rates are going to go up. They're not going to go down over the long haul. We're at a total bottom on the interest rate side. So rent's going to go up, the cost of home ownership will go up. That's why it's a great time to buy. Even if you feel like the market's a little frothy, you're locking in at historically low rates. And if you're going to be somewhere for 7, 10 years, you're going to look back a couple years from now and be like, wow, I really missed out.
Well, there's so much that we didn't get to. It would be great if we could do a follow-up later in the summer. We want to get into more of the suburban market, farther out suburbs, collar counties, and the second home market too is still on fire. So we need to talk about that. But what are your big takeaways for the second half of 2021? Mike, let's start with you.
My big takeaway or my big advice is to buy now. Don't wait, because prices aren't going down and interest rates are going to go up.
Yeah, mine would be to sellers. I mean, sellers have an incredible opportunity right now to maximize their sale. Don't blow it. Don't overprice it. Don't not spend the time fixing up your place to get more dollars for it. Take as much. Sometimes you only have one shot to make as much money as possible, and now you're in the best position to do it. And I just say take your time, work with an agent, position the home properly, get it sold quickly, and maximize your profitability.
All right, great. Well, looking forward to an eventful, always, second half of 2021. Thanks so much for being with us, and we will see you next time at the market.